Is the housing market going to crash? A lot of people have you think that we're on the verge of an imminent collapse. In my very amateur opinion, and it's just that, very, very amateur, not financial advice. See the disclaimer down below. I've got 4 or 5 charts that show that housing is in not so bad a shape. Let's take a look. Okay, like I said, a couple charts that show that housing right now doesn't look all that bad. We're going to look at DHI again, one of the number one construction companies. We're going to look at Lennar, another construction company that is smashing all-time highs. We're going to look at housing inventory, existing home sales, and delinquency rate. So again, this is all amateur observation. I'm just doing my best to listen to what some of the experts say, and then I'm just trying to simplify it so that we can all understand this a little bit better. Obviously not financial advice. Do your own research, all that good stuff. First up is D.R. Horton, again, one of the leading residential construction companies. And if you look at its recent activity, you can see that it was surging and then had a nice healthy correction. Now, it didn't hit, my favorites, if you've seen any of my videos, these 50% lines. It did dip below, but then came back up. So I mean, like, if you look at this in as anything other than a healthy correction, this is how stocks move. Like, they don't go straight up. They come up, they go down, they find support, and then they, go back up again if they're healthy. And at an all-time high and up since April of 2022, up 123%. Look, do you think you know more than the construction companies about housing? I'm not saying that we're necessarily in a massive, unstoppable bull run for housing, but currently there's no signs of weakness. So could we U-turn right here and crash? Is this exact top? Hey, I may be the counter signal. I may be the top. So take that for what it's worth. But right now, the construction companies are the smart money is investing in construction companies because the stock just keeps pushing higher. And if we hit a weak point, we're going to have to come down from here. We'll probably find some sort of support before this 50%. If it crashes right through, then that's probably real estate apocalypse, which a lot of people think is upon us and may happen at any moment. But I'm just saying it would really be a housing apocalypse for it to just crash from 130 through 80 and below. So we'll probably see a bounce at some point. And if we put in a lower high and then we go back down, so we're talking years out, if we then break it, then like that's entirely possible because that's exactly what happened in 2005, 6, and 7. This is basically the trigger for the great financial crisis. We topped out. So if we're exactly at that same top, then you probably will see. And these are quarterly candles. These are 3 months at a time. So if this corresponds to exactly where we are now, right here, this top is the same as this top. First, we'll see a massive drawdown, something like 30%, and then a bounce back up and a lower high. Now, we might not come all the way back up. This was almost basically a retrace exactly to the top. But we will need to see a, what will seem like a collapse. Something, stock drops 30%, especially something as big as residential real estate construction, and then comes back up and it starts putting in lower highs. And even when it approaches this 50% mark, you get a little bit of a bounce. So when that 50% mark finally falls, that's when you're in some trouble. And then if let's overlay the S&P 500. We've looked at this before, but you could see that the S&P 500 still had some time. It was still on the rise for almost 18 months after the construction market started to falter, and then we had the crash. So the warning sign is not yet in from DHI, at least. Let's now look at a similar company, Lennar. I'm not really sure how to say it. Let me clear these off. Again, like it looks almost the same, right? We had this spike up in 2003, 4, and 5. The crash started to happen into 2007, and then it bottomed out in 2008. The stock market lagged behind it. So almost exactly like DHI. You see this correction comes down slightly below the 50% and then blasting off to all-time highs. So that's two major construction companies that people are still investing in. Insiders, all the people you don't know about, people are thinking, oh, the housing market's going to crash. The housing market probably will crash eventually. This is too similar to what happened back here, but it just doesn't look like we're there yet. We might be here. We might be here. May have 3 or 4 months to go. We may have 18 months to go. It will probably see something similar to this. It's basically an 18-year cycle, but it does not look like we're there yet. So keep an eye on both these major construction companies. Now let's look at housing inventory. So this is, I wish I remembered who said it recently, but it's all about supply and demand. I did see some speaking recently about it, about how what causes a housing collapse is a lot of distressed properties and people needing to sell their house, an oversupply, and that forces prices down. That's not what we're seeing right here. This is housing inventory, active listings in the United States, about 650,000 right now. In July of 2018, there was double that. 1.3 million houses on the market. We've got half as many houses on the market. There's just no supply. People want to buy houses. Rates are high, so it's tough, but people want to buy houses. There just isn't a lot of them. People aren't listing them. I saw people talking about, like, I think it's something like, I want to say somewhere between 60 and 80% of homes have something like a 3% mortgage on them currently. People don't want to trade in their 3% mortgage. You sell your house, you probably sell your house at a profit because you bought it years ago, but you sell it and you have to get it somewhere else to live. And unless you can buy that whole thing cash, you need to take out a mortgage at 7%. Could be a good decision, could be a bad decision, but it just is showing that not a lot of people are listing their houses right now. I mean, a few years ago, there was double as many houses on the market. So whatever you think rates mean, you need to have more people selling their house. And you probably need to see a spike in this. And we'll look at it a little bit later as to why this would spike. But you need more houses on the market before an oversupply can drive down the price. Let's look next at existing home sales. Again, current home sales, 4.15 million. In July of 2021, it was 6.21 million. So we've seen a decrease in about 50% in existing home sales. Again, it just all speaks to undersupply of, not a lot of homes being on the market and being sold. And now we'll look at that distressed signal. This is delinquency rate of single family residential mortgages. So again, when the great financial crisis happened, everybody's loans were getting called in and people needed to foreclose. And that forced a lot of homes onto the market, and an oversupply causes a crash in price. That's not what's going on here. If we zoom out, and you can see here, this is 08 into 09, a spike to 11% of delinquent single family residential. So 11% of homes were either late or foreclosing on their mortgage. So it's at an all-time low. So people are not distressed. People are not going broke now. That probably has a lot to do with the labor market. The labor market is quote unquote strong. There's a lot of opinions on that, but unemployment is low. People have jobs. People can pay their mortgage. People are not delinquent. They're not late. They're not just abandoning their mortgages like they were in 09, which forced a ton of houses onto the market at lower and lower prices. Housing market collapses. We are not currently there. We saw a spike up in 2020, probably because we all know what happened then. But since then, just declining. If we weren't on the brink of like this feeling that the stimulus and the shutdowns from a few years ago has everything crazy, like the overprinting of money that went on, and like the huge spike in everything in the economy, and now the drawback down, I think all of these things would look like a healthy economy. But we know there's a lot of reasons to think that it's not healthy. But these signs that the housing market is going to collapse, I think everybody has these fears, like exactly what happened in 2007 through 2009 is going to happen again. It probably will happen again. It's just not happening yet. So again, maybe on the top signal, maybe you just counter trade this and say housing is about to collapse because this idiot thinks it's not about to collapse. But these 5 charts look like for right now, housing's okay. So take that and do what you want with it. Do not take my advice, not financial advice. Do your own research. But any thoughts you have on this? Any thoughts you have on any other markets? Let's look into it. Let's figure it out together. I'm obviously not the smart money. I'm just trying to figure this out as I go along. I'm sharing whatever I find, and more than happy for you to share whatever you find. You can leave it in the comments. You can follow me at Brendan Clancy on Instagram and Twitter, X, whatever we're calling it nowadays. And yeah, happy to talk, happy to discuss. Let me know your thoughts, and I'll see you next time.